Welcome back to the channel, where we go beyond the rumors to bring you the powerful, real-world forces shaping the future of the Iraqi dinar. Today, we're connecting the dots between Baghdad's digital revolution and the trillion-dollar algorithms that will decide its fate. Buckle up and hold on to your seats, because what I'm about to tell you will completely shatter your current understanding of the Iraqi dinar investment landscape. For years, the space has been flooded with whispers, hopes, and frankly, a lot of misinformation about a magical overnight revaluation that would make early holders millionaires. But today, we cut through the noise with something far more powerful: cold, hard, undeniable reality. The real seismic shift isn't a secretive RV memo from a shadowy committee, it's a loud, public, and technologically monumental revolution being broadcast from the heart of Baghdad itself. Forget the speculative gossip. The Central Bank of Iraq has officially launched the first phase of its national digital currency, the Digital Dinar, and this isn't just a pilot program, it's the foundational bedrock for an entirely new economic system. This move, backed by real regulatory frameworks like the Digital Payment Regulation Law and supported on the ground by major international bodies including the United Nations Development Programme and the U.S. Agency for International Development, represents the most significant financial overhaul in Iraq's modern history. It is a deliberate, calculated strategy to leapfrog decades of economic stagnation and directly attack the systemic issues that have plagued the nation: rampant corruption in cash-based systems, inefficient government payroll and subsidy distributions that often miss their intended beneficiaries, and a crippling over-reliance on the US dollar for large-scale transactions. Now, let's connect this directly to the dream of a stronger dinar. The traditional RV narrative has always hinged on a political decision to arbitrarily raise the currency's value. That fantasy is just that, a fantasy, and major global financial institutions see right through it. To put it bluntly, institutions like JP Morgan Chase have explicit, publicly available policies stating they do not buy, sell, or accept deposits of Iraqi dinar due to the high risks of fraud and scams associated with the currency. They are not part of some conspiracy, they are following standard risk management protocols for a currency that has been historically volatile and subject to manipulation. The real path to strengthening the Iraqi dinar lies not in a decree, but in building tangible, global confidence in the Iraqi economy and its financial governance. This is precisely where the digital dinar becomes a game changer. By moving transactions onto a digital ledger, the central bank gains an unprecedented, real-time view of monetary flow. This transparency is a death knell for the shadow economy and a powerful tool for enforcing monetary policy. It allows for the precise tracking of how money is spent, making it exponentially harder for corrupt officials to siphon off billions in physical cash. This isn't about making millionaires overnight, it's about building a legitimate, traceable, and efficient economy from the ground up, which is the only sustainable foundation for long-term currency strength. So, why is this rollout happening now, and what does it mean for the world's perception of Iraq? The timing is critical. Iraq has been under intense pressure, both internally from a populace demanding better services and transparency, and externally from global partners and financial watchdogs, to reform its financial sector. The Digital Currency Initiative is Iraq's bold answer. It signals to the International Monetary Fund, the World Bank, and potential foreign investors that Iraq is serious about joining the 21st century digital economy. It's a move to reduce the economy's dollar dependency, which has been a point of vulnerability, by creating a robust, sovereign digital payment alternative for domestic commerce. Think about the implications. When government salaries, pensions, and subsidies are distributed digitally directly to citizen wallets, it eliminates layers of middlemen and ensures the full value reaches the people. This increases public trust in the government and in the currency itself. When large commercial transactions between Iraqi businesses are conducted in digital dinar on a secure platform, it reinforces the dinar's role as a true unit of account and medium of exchange within the country, gradually displacing the dollar's dominance. This is the unglamorous, technical, but utterly essential work of nation-building and economic stabilization. It may not have the dramatic flair of a revaluation rumor, but its impact will be deeper, wider, and far more permanent. It transforms the dinar from a piece of paper subject to black market whims into a programmable, secure, and modern asset integrated into a governed financial ecosystem. This is the real huge news, the construction of the highway, not the announcement of a single car's arrival. Alright, let's shift our focus from the hopeful, future-looking foundations of the digital dinar to the far less forgiving reality of today's global financial markets. This is where the rubber meets the road, and it's a place of immense pressure, high-stakes automation, and brutal geopolitics that won't spare a currency, no matter how promising its underlying reforms may be. So, let's start with the single most dominant force in this landscape, the US dollar. You've heard all the talk about de-dollarization and a weaker dollar. Yes, those narratives have a firm basis in reality. The first half of 2025 was, in fact, the worst period for the US dollar in over 50 years, with its value declining significantly against major and emerging market currencies alike. This has been driven by a complex mix of factors, from mounting doubts about US fiscal strength and capricious trade policy to major institutional predictions of a gradual depreciation ahead. This weakness is not just a technical blip, it's a powerful macroeconomic current that JP Morgan, which turned bearish on the dollar in 2025 after 4 bullish years, attributes to a combination of cyclical factors like US economic moderation and tariffs, as well as deeper structural factors. They see this as a significant shift in the underlying landscape, where US policy, including broad-based tariffs, is actually expected to amplify the dollar's downtrend. Now, why does a weak dollar matter to Iraq and the dinar? This is the critical pivot. When the dollar weakens, it creates opportunities for other currencies and economies, but it also opens the floodgates for safe haven buying in assets like gold, which has soared as an alternative store of value. More importantly, it fundamentally alters global investment flows. With the dollar looking overvalued and under pressure, massive institutional capital, trillions managed by funds, banks, and corporations, is on the hunt for yield and diversification. This capital could theoretically flow into places like Iraq, but it doesn't flow randomly or based on sentiment. It flows through hyper-efficient, automated channels governed by ruthless algorithms. This brings us to the engine room of modern Forex, a $7.5 trillion a day market characterized in 2025 by extreme volatility driven directly by geopolitics, trade wars, and central bank policy shifts. Every tariff announcement from the US, every development in global conflicts, causes immediate and massive surges or drops in trading volume as institutional players react. In this environment, market participants are desperately trying to reduce their reliance on slow, manual processes like phone calls and emails for currency transactions and are accelerating investments in automation, artificial intelligence, and machine learning to manage risk and capture fleeting opportunities. These AI systems are being deployed for everything from data analytics to algorithmic execution, transforming Forex into a battlefield of predictive models and automated workflows. This is the arena the Iraqi dinar must now perform in. It's not a gentle introduction, it's a trial by fire. For the dinar to gain real traction beyond its borders and see its exchange rate stabilize and strengthen from genuine demand, not speculation, it must become a viable asset within this automated, institutional system. It needs to be a currency that AI-driven trading desks can model, that large corporations can hedge exposure to, and that fits into the risk parameters of global bond and equity funds. The current reality, however, is starkly different. Major US banks like Chase have explicitly updated their policies to exclude the Iraqi dinar from standard exchange services due to high scam risks and regulatory complexities. They do not buy, sell, or accept dinar deposits, and they maintain this stance regardless of online rumors. This institutional cold shoulder is a significant barrier. It means that for the average international investor or business, accessing the dinar is not a simple click on a trading platform. It requires navigating specialized, often costly, services. The dinar's journey from a cash-based, domestically focused currency to a digital, internationally traded one involves convincing not just people, but the cold logic of risk models and compliance algorithms at the world's largest financial institutions. The digital infrastructure we discussed is step 1. Surviving and thriving in this volatile, AI-driven Forex market is the monumental step 2, where the true test of Iraq's economic transformation will be judged not by its government's press releases, but by the silent, relentless calculations of machines managing the world's wealth. Now, let's bring this all together and talk about what this actually means for you, the investor watching this, and for the future you've been anticipating. We've laid out the two powerful, competing realities, the undeniable, ground-up technological revolution happening within Iraq through the digital dinar, and the brutal, algorithm-dominated global Forex market that remains deeply skeptical. The critical question that emerges from this clash is not, will the dinar revalue, but something far more profound and practical. How does a currency, and by extension a nation, build unshakable confidence in a world that trusts data over promises? The answer lies in the convergence of these two forces. The digital dinar's primary mission is to generate a new kind of economic data, clean, verifiable, and transparent, that the global financial system can finally trust. Every digital salary paid, every subsidy delivered without leakage, every business transaction settled on the sovereign platform creates a data point. When aggregated, this data paints a revolutionary picture. It shows a reduction in the shadow economy, an increase in formal tax compliance, a measurable growth in domestic digital commerce, and a steady decrease in the population's transactional reliance on the US dollar. This isn't anecdotal hope, it's quantifiable economic progress. This is the evidence that credit rating agencies like Moody's and S&P look for. This is the dataset that the International Monetary Fund, IMF, will analyze in its next Article 4 consultation with Iraq. This factual, traceable improvement in economic governance is the only credible argument that can eventually persuade the risk models at a place like JP Morgan to reconsider their stance. The digital transformation is, therefore, best understood not as the revaluation event itself, but as the construction of the very runway upon which a stronger, more stable dinar could one day take off. This process inherently redefines the very concept of value for the dinar. The old speculative model was fixated on a single, magical number, a new exchange rate dictated by fiat. The new model, built on digital and data foundations, is about the dinar earning its strength through utility and stability. Think of it like a company's stock. A stock's price isn't arbitrarily set by the CEO, it is discovered by the market based on the company's earnings, its growth prospects, and overall investor confidence. The digital dinar aims to give the Iraqi currency its first real earnings report. Its utility as a preferred, efficient, and secure medium of exchange within Iraq's own borders is its core product. The stability provided by transparent monetary policy and reduced corruption is its competitive advantage. As this company, the Iraqi dinar as a functional asset demonstrates consistent performance, the market, which includes other central banks, currency reserve managers, and institutional Forex desks, will begin to assign it a different value. This adjustment will be gradual, responsive to real economic indicators, and far less susceptible to the wild swings of rumor-based speculation. It shifts the dinar's trajectory from the realm of geopolitical gambling to the domain of fundamental economic analysis. A potential future increase in value, when it comes, will be a recognition of proven success, not a bet on a promised one. It will be baked into the system, not announced by it. So, where does this leave you, after years of following this story? It leaves you at a historic crossroads with a clear choice. You can choose the exhausted path of chasing the next huge news flash bulletin from unverified sources, waiting for a fantasy event that major banks and economic realities categorically reject. Or, you can choose to become a truly informed observer of one of the most ambitious national economic makeovers in the 21st century. Your call to action is this: shift your focus from counting dinars to understanding the metrics that will actually count. Stop searching for RV confirmation codes and start monitoring the official publications of the Central Bank of Iraq for reports on digital transaction volumes. Follow the analyses of the IMF on Iraq's economic progress. Pay attention to global Forex commentary on emerging market digital currencies. Watch for tangible milestones. When does the Baghdad Stock Exchange allow settlements in digital dinar? When does a major international company, like a telecom or energy firm operating in Iraq, announce it will pay local suppliers digitally? These are the real headlines. This journey will require patience. It is a marathon of institutional reform, not a sprint to a finish line. But by aligning your understanding with the actual mechanisms of modern finance and economic development, you transform from a passive spectator of rumors into an empowered analyst of real-world change. You'll be able to separate the signal from the noise with authority. The transformation of Iraq's economy is real and underway. The question is, will you watch it through the foggy lens of yesterday's scams, or will you see it clearly for the groundbreaking, data-driven project it truly is? The tools to see clearly are now in your hands. Use them.